Welcome to Metals, Money, and Markets. We are December 14th. For MiningClips.com, Rob Goodman. And as always, Mickey Fulp, the Mercenary Geologist, will run through this. Big dollar week, Mickey. Dollar up, gold off. Let's start there. Off $10 this week.
Yeah, with only 7 shopping days till Christmas, the precious metals were mostly down on a strong U.S. dollar, surging U.S. dollar, in fact. Gold closed down $10 to 12.38. Silver was down 6 cents, 14.53. Platinum lost $7, closed at 7.85. Palladium continues to buck the trend. It gained $17 on the week to close at 12.23 for almost 1.5% gain. It is pushing toward parity with the dollar once again.
And meanwhile, copper off a couple pennies here.
Yeah, and I have to say that I think platinum is overbought and overvalued. Meanwhile, copper was down 2 cents. It was flat most of the week, and it was flat yesterday until right at the close when slowing Chinese economic data knocked it down a bit. Get this, Rob, it is in backwardation for 5 years out, which is as far out as I can get data. On a positive note, there's been some labor issues at Chuquicamata, which will affect supply at some point if they continue.
And shifting gears to the energy markets, oil continues back down here after an up week.
Yeah, oil actually had a bad day yesterday. It fell to 51.16, 2.5% loss. There was some data that came out after market that might change that. The Ruskies quit a $30 billion deal in Iran, so we should see that affect the oil market on Monday morning. Meanwhile, rigs were down 4. It's unknown if that's because of oil prices being down or perhaps the holiday season or a combination of both. Production, 11.6 million barrels. That's an EIA estimate. Put whatever stock you want to into that. Inventories are flat. The IEA, the International Energy Association in Paris, came out with a 2019 forecast with a supply-demand balance with these recent OPEC cuts. Meanwhile, the Chinese are taking advantage of these low prices by stocking up with the price low. And Libya is lost 300,000 barrels a day in production with the continual civil war conflict there.
And uranium off as well.
It's stalled at $29 plus or minus for 7 weeks now. This is kind of a slow season for uranium contracts as expected, so it closed at 28.63 on the week.
And head over to the currency markets here. As I mentioned, big dollar week here, and the euro, the big loser here.
Yep, the dollar closed at a 1.5-year high. We haven't seen this value since May of 2017 at 97.67, up well over 1%. A lot of this has to do with no one wants other currencies, especially the euro. It went below, a little bit below $1.13, closed at 112.9. With the Brexit debacle, the yellow jackets in France has really hit the euro hard. Meanwhile, the loonie also swooned less than 75 cents, closed at 74.64.
And heading over to the equities markets to wrap it up here. Down days, Friday down days here across the board.
Not so fast, my friend. Bitcoin hit its 1-year high it will be coming this Monday, December 17th of last year. It is now down 85%, and since that high of 19,434 or whatever it was, closed about $3,200 yesterday. That is now, the current price of Bitcoin is 40% of what it costs to mine a new Bitcoin worldwide. And going on to markets as you wanted to do, the VIX remained very high this week, averaged 22 plus or minus. All the major markets, well, I shouldn't say all, most of them are negative on the year, with the exception of NASDAQ, which is 7 points off higher than what it started the year at. Investor sentiment has really turned negative over the last 6 or 7 weeks. It's the lowest it's been since 2013, and that's caused retail investors to start moving out of mutual funds and indices and ETFs and going into cash for some measly money market return. So markets do not look especially healthy right now. All are in correction territory for the year. We got the Dow at 24,101, down more than 1%. All the markets down 1% or more. S&P 500 closed at even 2,600. NASDAQ at 6911, also lost 1%.
And speaking of poor health, the Toronto Venture Exchange, the new year cannot get here fast enough, off 3%.
No, I think it needs 3 or 4 more days of getting beaten down, and it gets us contrarians and opportunists more buying power. It closed at 555, down 3% on the week. That is a 2.5-year low, but as we have predicted time and time again, December 15th plus or minus 2 or 3 trading days is when it reaches its tax loss season low. So those buying opportunities will continue at least through midweek. The curious thing about this year in tax loss selling, it's been pretty brutal. It means there's no bids basically, but because there's been very low volume. So anyway, we hope to come back next week and say we picked up some more good stocks on fire sale.
Okay, we'll look forward to that. Appreciate the insight as always. Mickey Fulp, the Mercenary Geologist. Look forward to talking to you next week.
Thanks a lot, Rob.